Yeah, I'm losing my edge.
But Pete, everybody's favorite pastime should be trading because, like I said, you can win some money trading, and then you can apply it to your cigarettes or your whiskey or whatever vices that you feel free to dive into there. But there is the idea of having enough time to make that money, and we talk about all the time that, all joking aside, not every trade is going to be a winning trade in futures. It's a matter of getting that success rate up to a healthy lead on top of 50%. But to do so, Pete, you're going to need enough time to get these individual trades themselves their best chance at success here. And to lead off, you have three of the four products here in the small exchange world at 2020 price extremes. Okay, you had precious metals just this morning touch 81.5, which is the upside extreme for that market here at the smalls. You've got the STIX here, the newest product, small technology, 60, making new highs as we speak. You have the small US dollar here, SFX, as of this morning, making new lows on the year. But all of these extremes and all of these trading opportunities are nothing if you don't have enough time. And Pete, what's the number one the number one enemy of traders who need some time to be right in their trades?
Size. I would say, you know what? Size takes away time because it forces you. If we talk about mechanics that are comfortable and you actually stay mechanical, your mechanics force you to act before you have time for your idea to play out because you're constrained by the size of the product and the potential loss you're experiencing at any moment. So, you hear all these trites say, oh, size kills, whatever. You know what? Strategically, you have to think about that. There's nothing wrong in scaling up trades, but the idea of doing that at a certain point, not being forced to do it. Right now, to an extent, a lot of the products that are offered, you're compelled. It's one size doesn't fit all. And they're trying to convince you on the idea that you can tame the beast. It's really not. And so time is an important consideration and strategy because no one pins strategy perfectly in terms of my strategy is this and the execution at noon was spot on. Strategy needs time. It needs to be melded with mechanics. Mechanics determine how you manage that location. And if you don't have enough time for your strategy to work out, you're basically in a position of developing successful strategies that you end up losing on, which flips that whole 50-50 coin into the wrong side of the equation for many of us.
Oh, you're 100% correct. Because you can paper trade or you could simulate a million different things and get that strategy that you like, Pete. But when you've got real money behind it and you see the fluctuations in that money and you have something that's fluctuating hundreds of dollars to thousands of dollars intraday, that'll take any strategy right out of that. And also, I want to get this out of the way. The people who do say, oh, well, I prefer these big products because I want to make thousands of dollars when it goes in my favor. That's great. But if you're looking for thousands of dollars in your favor and you're getting tapped out every time you see a couple $100 in losses, that strategy piece, once again, is going to be thwarted. So let's get to a place where the product can be one size fits all, because you can't walk a product down to fit someone who's smaller. But like you said, you can scale it up here to get larger. And I would love more than the best problem I have here, Pete, is seeing a price extreme like we saw a couple of weeks ago before precious metals came back, where it's like, oh, I sold one here and okay, it's a couple $100 against me and I'm comfortable enough to add another one. Because that's a much better problem to have. Or if I sold one here and it immediately reversed and it's like, oh, I wish I had more on. That's something that is the best problem to have. The worst problem to have is selling it here. And instead of a product that moves $500 or $600, $700 against you, is a product that moved, like we saw in traditional gold and silver futures, $10,000 against you. And it quickly becomes, okay, I have too much on as opposed to not enough, and I don't have enough time to see this reversal here because price extremes present so much opportunity in many different ways. And several times we saw this price extreme to the downside in metals here, and then multiple times to the upside in the last month and a half here. But you have to ask yourself if this product is going to give you enough time to be right. You and I love to scalp intraday, but when you're looking at price extremes, like we've seen in metals and in stocks and in currencies recently, Pete, you need more than a couple minutes, which some of those traditional products, they take you out in a couple minutes.
Yeah, no, and you're absolutely right. Intraday ranges are one thing to trade back and forth, but if you're looking for more strategic trades where you're looking at extremes, I think this is a great example because we've talked about this before. Let's take out the March pandemic. So we've gone from 65 at the high end up to 85. That's almost a 35% move, 33% to live in your world. You're
a little under that, but I'm going to let it go. Let it go.
Fair enough. Anywhere along there, as you said, could have been an interesting 75, 77s could have been interesting. Would you have been right? You know what? You have the potential with the market trading around 80 cents right now. 80.33. You're still in the game if you take that time and look at the time it took for that idea to unfold. Now, this is the difference between a scalping idea and a strategic idea. Can you scalp around your strategic idea? Sure, but that's a lesson that, again, that's another type of strategy. Let's work on core strategies. And if one of your core strategies is trading extremes, you need to give yourself that time.
Sure.
And part of what makes that easier is location. Location is only found in markets like this by being able to select several price points. Now, the paradox is if you are only going to be short multiple units on the upside, and if you're right, you only have one, there you've kind of engineered a no-win situation for yourself. But the ability to put some different price points on in a market that is, whatever we've looked at these perverse extremes, we can argue it was an interesting extreme and the location would have been poor. The ability to add units without getting outside of your mechanics or your loss metrics is critically important here because you've now engineered it. 29.25 in silver this morning would have pretty much taken out anybody who wanted to be strategically short silver because you had sold it between $27.5 and $28.5 and you're out $4,000 a contract. Here is a situation where we'll see how the next 20 days unfold, but if this is part of a strategic portfolio completely different than what maybe your scalping is or something else, time is the crucial element to success.
Absolutely. Because you have here in metals and technology, although the numbers are slightly smaller, it's been the most ridiculous extreme of the two in the last couple of weeks here. Like we talked about, NASDAQ futures up 10 of the last 12 days. So not abiding by this average 2.5-ish days needed to reverse off of all-time highs here. But this is what we're talking about. And here you have the average and maximum number of days before we saw a reversal from those highs. And going back to this chart, you see this where it's like new high, and then a little bit of a reversal. Not really one here. So still not a great example, and one that maybe you were lucky to scratch here. Like I said, they're not all winners. But here's another one where it's new high, hanging around the high for 2 or 3 days, and then you get that reversal. And like you said, Pete, if it's a product like silver or gold, those traditional futures, that's thousands of dollars in losses that you're going to have to hang with for a couple of days here, on average needing 2.5 days. But at its most extreme, seeing 8 days through new highs. And you can't do that as we go on to more numbers here. You can't do that with a product that moves $2,700 a day. Here in silver, recently moving $3,500 a day. Here in NASDAQ, moving $4,400 a day. If you have a market that needs 2 to 3 and at most 6 or 7 or 8 days to come off of that high, if you need that amount of time, Pete, I can't take day after day of $2,700, $3,500. And I have the smaller versions of these, but still 8 days of gold moving against you, adding up $300 at a clip here. That's going to get to $1,000 very quickly. Silver, even worse, and NASDAQ in the middle there. I can't take.
Right. I love the point you make. This is daily on a run up. This isn't like the 7 days of run up. This is my most painful point. This is the per day pain. So that, as you mentioned, even the world of micro, those are big moves.
Well, because I want to get to here, our products around the average daily move. We love to advertise this around $100, because even 8 days of $130 is a lot in the small precious metals. And I got emails from people saying, hey man, you guys talk about this being a small product. I'm seeing $800, $900 in losses. And I feel for that. This is, I can't reiterate enough, this is the biggest extreme in metals movement in the last decade, maybe. And so if you got caught a little early, I am sorry about that. And I do sympathize with this being the biggest outlier in a decade. But Pete, this move here of $1,000 after 8 days of these $130 days here in precious metals. I mean, imagine if instead of going to the smallest precious metals, you went to even the micro gold, which is the smallest option here in metals futures. That's still, instead of being $800 to $1,000, that's going to be $2,000 to $3,000 here in silver. Even the micro silver contract, Pete, is going to get you closer to not $1,000 in losses, but $7,000 in losses.
Which, I mean, think about that. That is, you know what? That's huge. And we've talked about this. So I've got strategy. I need time. I'd like to maximize location. Smaller products doesn't mean I remove that last piece, which are mechanics. It's just tolerable mechanics that let me come back and learn and build successful strategies, not take me out. Any one of these moves, even on the micro side, if you've got a $10,000 to $20,000 account on a single occurrence, you've done some material. I mean, in some points, you've completely taken the account apart. But think about that. So the smaller products empower you to build strategies and stay in, learn the product, find which strategies are successful, but doesn't mitigate. I'm sure I'm not criticizing anybody. These are huge moves, even in tiny products, but they still require mechanics, but mechanics around a comfortable size.
Yeah, mechanics are absolutely essential. Today's conversation, though, helping people to feel a little bit more comfortable with a strategy that needs time, because we all love the easy winner. We all love the strategy that I sold the market and it turned around on a dime. But most people's strategies, especially when you're looking at price extremes, they need more time, Pete. And out of all the futures in the futures universe here, the small exchange ones give you more than enough time to be right relative to those traditional futures.